Well, first of all, obviously they're not in control of the economy. Otherwise, we wouldn't be talking about revising their deficit numbers yet again. The economy is disappointing what they had anticipated. And I think
it's not just global factors at play here.
It's certainly not global factors. I mean, it's pretty clear that Italy has a lot of domestic factors that are weighing on that economy, which have been there for decades. Talking about, of course, the slow productivity evolution and a very uncompetitive economy in that sense. But clearly right now, they are still at a knife edge. So no matter what De Maio was saying about how he looks favorable at the Italian economy, he makes a couple of fair comments in terms of it being a net creditor nation, having relatively a lot of private sector savings. I think if you look at the public sector, they still really are at a knife edge. I do think there will be challenges and tension around these higher deficit numbers because it puts the sustainability of the public debt profile again under big threat, and that is a key number to look at for the rest of Europe.
I take your point about that because the market was stressing last year as it looked like we had better economic conditions for Europe, and they were questioning whether Italy should be spending so much money and not tackling the deficit. But now that we've got weaker conditions and there seems to be a slightly more relaxed mood in Brussels about spending, you've got to ask the question whether the measures from the government's perspective are the right measures to stimulate growth. And looking through the fine print, is there anything in the budget, anything in the measures that would be positive for the economy?
Well, that's the other problem, that to the extent that they spend or not save enough, or certainly where they spend it, it's not really aimed at long-term growth or improving productivity. It's not really aimed at improving the economic infrastructure of the country. It's much more actual spending measures supporting income and safety net. And while that might be socially and politically attractive, it doesn't clearly create a realistic upward path for the underlying trend in the Italian economy. So that's another problem. Furthermore, we have seen last year clearly that the market will not be very tolerable, as will the rest of Europe, with these higher deficit numbers.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.